talking about an Islamic investor, I think first and foremost, if you are constructing your own portfolio, and you're not a specialist at it, I think it's good to get support and advice. Right, Wahid is not in Singapore, so there are many financial advisors and so on that can help you construct a portfolio. And that will be one of the better ways, and you get good advice. But if you are feeling like you want to DIY the whole process, I think it's good to study and first identify the universe of Islamic ETFs available out there. There are not many. So, like if I were to do it personally, I'll look at what Wahid has, I will look at what iShares has for Islamic ETFs, and I will pick what are the certain exposures that I want. So I think for now, Wahid only has that US equities ETF listed on the Nasdaq. And then if you are feeling more, emerging markets world, there's also the iShares MSCI ETFs that are, I think, traded out of the London Stock Exchange. So first identify the universe, what is available out there, and maybe get professional advice to allocate. You don't want to go all in into a certain asset class, because that will mean more volatility to your net worth or your income, because you are putting all your eggs in one basket, right? If let's say the only thing you invest in is the Wahid Halal ETF, I wouldn't say that's a smart thing, because what if the US economy tanks and you put your entire retirement fund into the Halal ETF? That's not a smart way to do it. So identify what are the available ETFs and decide on the asset allocation. Wahid is not available in Singapore, unfortunately, but I think it's good to get advice. And secondly, if you want to be more, intricate in your process, you can do a bit more research on the ETFs that you are buying, right? What's the size? How long has it been around, right? Most of the Islamic ETFs, they are still very new, so you'll see that they are probably less than 5 years old. I think Wahid's ETF is about 2 years old almost. Then iShares is slightly older than that. And then you have a newer ones also that are listed in the US. So the longer they are, basically gives you the comfort that they are more stable, right? And then secondly is to look at the performance of the ETF, right? In the purpose of buying an ETF, more often than not, when it's equities, is to track a certain benchmark. So how successful have they been in tracking the benchmark, right? So you can look at that by looking at the difference between the ETF price and the net asset value of the ETF. So the closer the price to the NAV means the more successful the fund manager has been when it comes to really tracking the benchmark. And lastly, you should also look at the number of underlying stocks within the ETF. So like Izzat mentioned, the Halal ETF that Wahid launched on the Nasdaq has over 220 individual Sharia compliant stocks, right? And that's good diversification. So for example, for the sake of a mental exercise, for example, an ETF, a Sharia ETF only has two stocks, Boeing and Airbus, right? And then suddenly there is like two back-to-back plane crashes concerning Airbus and Boeing, right? Airbus and Boeing stocks are going to go crashing down, and so will your ETF, because your ETF only has two stocks. But if your ETF has 222 stocks, whatever happens to Airbus, assuming that Airbus is part of that 222 underlying stocks, will not have a material impact to the performance of your ETF, at least in the short term. So looking at how diversified your underlying stocks are would be also a meaningful way to justify your choice to a specific ETF.